All right, welcome back. 75 points higher, 18,552 is where we are at. And things have picked up quite a bit from the low point of the day. It's off the highs, the last 15-minute high as well. But solid market. Susmit Patodia is Associate Director and Fund Manager, PMS, a Motilal Oswal Asset Management Company. Susmit, great to have you here. Thanks very much. Let's just start with L&T Infotech, which has reported numbers, and the commentary has been very strong for the next 2-3 years. What can we broadly take away from that for other mid-cap IT businesses, if anything? Because that is one area where there is more recently, especially after TCS results, there was a fair bit of debate whether, maybe, the runway for growth is as strong, whether margin pressures will hurt, etc., etc. L&T Infotech, of course, has none of those problems. What's your sense?
Good morning, Prashant. I think it's now pretty evident that the demand is abundant for the Indian IT companies, or for that matter, any IT services company globally. It is all about the supply. Because of the last 10 years being a little soft for IT growth, the number of engineering seats actually came down in India. And in one of the recent podcasts, I think Mr. Hitesh Oberoi of Info has also alluded to it, that the problem is of supply for the IT companies. So I think, whether it is 1 year, 2 years, in fact, TCS themselves have been talking about 5-year visibility of growth like never before. And Sanjay of L&T Infotech kind of reinforced that with more guts. So also, you have to remember the scale is different for both these companies. So, I think there is a lot of demand. It is just that whoever thought we will ask this question, do we have enough engineers to fill that demand in India?
Hi, Susmit. Good morning. This is Pavitra. We've spoken about the real estate space, and the demand continues to see good pickup. And in fact, we had Indiabulls real estate post earnings over the weekend. They've seen sales surge over 50%. How do you look at some of these stocks? Do you think there's lots more to go in the real estate pack?
We are coming out of a 10-year cycle out of real estate, so I think there is a long way to go with respect to where the demand can go and where these companies and their stock prices can go. So we're just starting off. Right now, we are actually at that inflection point where probably all the supply that can get sold or which is built up is getting absorbed. You will have the next leg when you will have land acquisitions. I'm sure the cycle will repeat where projects will get sold on launch, prices will go up the second day of the launch, and so on and so forth. So the whole cycle will continue. The great thing is home loan rates are still at 6.5%. Developers now are ready to sell prices, not at prices at which they will get sold rather than hold prices. So the combination of these two, and obviously, let's not forget that there is a wealth effect from the equity markets, which also finds its way into real estate, as we have again seen in the 2003 to 7 cycle. So all these factors coming together, I personally think that we are at the beginning of this real estate cycle, and not only for real estate companies, I think the whole ecosystem benefits, right? Whether you think about wires, pipes, cables, sanitary ware, tiles, the whole ecosystem will benefit from this.
I got that. Anything new, any portfolio changes you've made, Susmit? Any sector you're looking at which is looking interesting at this point?
So, we've been quite bullish on small caps and mid caps over the last 1 year. And we think now is the time to be a little cautious on the small caps and mid caps, not because they have done so well, but because, whenever we see valuations in excess of the large caps at not very different growth rates, that is where we start to become a little cautious. Just from a bottom-up approach itself, I think almost after 2.5-3 years, when we look at stocks in a similar sector or with similar characteristics, we are finding that the large caps are a little better priced than the small caps. So I think we are seeing signs of this. Obviously, the party can go on for much longer. But this is the first time, I would say, since the crash of mid caps in 2018-19, where we are seeing some large caps being more attractive than small and mid caps in the similar sector.
Okay, you mentioned valuations, but valuations are expensive across the market, right, for pretty much most of these sectors. So if you want to put in some money right now, what sectors would you look at? Even if it's the large caps, what sectors would you look at?
So, I mean, the sectors that we like continue to be same. We think banking is probably the most attractively valued sector. The growth pathway is immense. I mean, we cannot have a $5 trillion economy without credit growth of 15-16% picking up. So, we continue to be very bullish on banking. Life insurance is another old bet of ours, continues to be our favorite. And this whole real estate sector that we've been speaking about for the last 6 months, the whole ecosystem that feeds into real estate. I think these three are sectors that have very long runway for growth, and they are very moated businesses. Right? So, at the end of the day, there are only 4 or 5 pipe companies, and it's very difficult to break into this space. Similarly, in sanitary ware, if you see, there's only one sanitary ware company in India which actually manufactures more than 70% of its produce in India. Most of the other companies actually imported from China. So these are small sectors right now, but they have very, very long runway for growth, and they're still fairly priced.
All right, Susmit, great speaking with you. Thank you very much for your time. Appreciate you joining in with that commentary at this point in time. Well, the market's up 88, and we're at 18,000.